Today we're going to give a demo of our machine learning based stock price forecaster. It uses natural language processing. And one thing I want to just encourage everyone is to feel free to drop in questions on the circle chat. So I'll chat with you guys right now just to let you guys know how to do it. And I like to try to keep this as interactive as possible. So feel free to ask, drop in comments or ask questions. Here's the agenda. So first of all, it'd be great to know who's on the call. So if you guys can just introduce yourself, I'll go over a little bit about that. I'll give an introduction to myself. And then we'll talk about why we need to do machine learning based forecasting. We'll talk about the tools that we'll be using. I'll be going over some of the collab of how to use it. We'll talk about some of the forecasting we're doing with crypto and TQQQ of some of the backtesting results. And then I'll talk more about the course. And then, of course, if there's any other questions at the end, we'll address them as well. But just want to encourage everyone to keep this interactive, makes it more interesting. So drop in comments, questions as we go. Okay, so if on the circle chat you can type in what is your occupation, how much you know how to program / code, how much investment experience do you have, and so I'll give an example right now on the circle chat. So my occupation, machine learning expert. In terms of do I know how to program code? So I've been programming since I was 6. And then how much investment experience do you have? I started trading options after college. Okay. So if you guys can just kind of answer these 3 questions in the circle chat, that'd be great. I'll paste this into the chat so that you guys have it. Yeah, thank you, Nick, for your response. Okay, let's get rolling here. Okay, so who am I? So my name is Greg Tanaka, and I'm a machine learning expert. I've, as I mentioned in my little chat, I've been programming since I was 6. Actually, I won my first programming contest when I was 7. I studied electrical engineering, computer science at both Caltech and UC Berkeley. Also did some graduate work at Stanford. I did a lot of early work around video compression, GPUs. I've been doing a lot of work in the machine learning space for the past 15 years. And also I'm a pretty active trader as well. So I have been trading options since I finished college. And for a while I was actually making quite a bit of money doing options. And I've also been part of a lot of startups, including founder and CEO of several startups. One of which, we raised at a $45 million pre-money from Andreessen Horowitz, Menlo Ventures, Google Ventures. These are some of the top tier venture firms here in Silicon Valley. And so, and my firm right now, we do a lot of work around algorithmic trading using machine learning. So that's a little bit about me. And what is Lumabot? So Lumabot is it's kind of like the idea behind it is to allow people to rather than just getting a fish, learning how to fish. So these days there's a lot of opportunity doing algorithmic trading to use computers to help trade, and Lumabot really helps you with that. So they have a lot of courses on crypto, on how to trade with crypto, how to do machine learning, how to do algorithmic trading. And one of the best ways to actually know about Lumabot is through the YouTube channel. So this is probably one of the best deals on the net. So there's a bunch of free courses like this one that we have on the site. So I'd strongly encourage you to you can look at our reviews. You can also get a lot of good information about how to get started with blockchain programming, or how to use machine learning, or how to do algorithmic trading. So there's a lot of really great content and almost new stuff coming all the time. So definitely strongly encourage you to check out our YouTube channel. to get to know about more about Lumabot. But the second thing is check out our Discord channel. So this is our Discord channel, and it's a super active community. So whether you take the course or not, I strongly encourage you guys to take a look at the channel here, because there's just a lot of good conversation between pretty much everyone that's trying to do some stuff around algorithmic trading. So whether it's using like our free Lumabot here, or trading crypto, or looking at forex, or some other types of algorithmic trading. You come on here, there's a lot of people. You can see right now there's already 125 people online, so there's almost someone online all the time. It's actually, to be honest, a little bit hard to keep up because there's so much discussion here, and it's really quality discussion. So if nothing else, I would strongly encourage you guys to check out the Discord channel. So let me just paste these two links into the circle chat so you guys can do that right now. So this is our YouTube channel, and I'll put the invite for our Discord channel on there as well. Okay, so to get the maximum value of this course today, our short course today, is for you guys to ask questions as I go. So, if there's something that isn't clear, something that you have questions or make comments on, just drop it into the circle chat, and I'll try to address it. So I have the circle chat stuff and another screen, and I have my presentation here. So I just have to glance up to take a look at it. So definitely keep the questions and comments coming as we go. So what is trading? So if you think about what trading is, the core of it is forecasting. You're trying to forecast what's going to happen. You're basically taking a bet as to the stock's going to go up, it's going to go down. The currency you're buying, like the euro, is going to go up against the dollar, down against the dollar. You're making some sort of forecast, right? Maybe it's about volatility. It could be about price. It could be about lots of different things. But in a sense, what you're trying to do is you're trying to forecast what's going to happen. And the technique that a lot of traders use traditionally has been things like RSI, Relative Strength Index, or other ones. These are relatively easy to compute metrics that people look at. So like, for instance, this is the stock price candlesticks of the stars group. And what you see down here is a calculation of the RSI based on the price. And you could use RSI to figure out, like, well, hey, if it breaks a certain level, then it might mean that, oops, sorry. I think this changed. If it hits a certain level, then it might mean that it's a sign that it's going to go on a bull run, right? Or if it drops, right, then it means that there's going to be a pullback in the stock. So you can kind of see that here. It's not a perfect pattern, but you can kind of see that. And so a lot of people use these kind of techniques to help them assess what's going to happen in the future. So it's a way of forecasting. But it's a very simple way, right? It's not terribly sophisticated and not terribly accurate, right? Because you can see that, for instance, it broke 66 over here and over here and over here, right? So it did a bunch of other places, and the stock didn't necessarily zoom. In fact, it dropped over here. So it's not necessarily the best indicator. And so one of the problems with the traditional indicators is, and I'll show this to you. There's a really great site out there. If you guys aren't on this, it's a great place to look at. It's called Seeking Alpha. And in Seeking Alpha, what they had an article, and it's a few years old now, but even back then, 80% of the stock market is algorithmically traded, right? Only 20% is actually manually traded. So the situation is that a lot of the easy, profitable strategies have been consumed, have been automatically written in software decades ago. So that's why it's really much harder now to day trade successfully to actually make money, because a lot of the really simple strategies have been taken and automated. So that's one of the big problems with traditional indicators, is that it doesn't give you much of an edge anymore. Too many people do it, and the people that do it automatically. So you're not getting much of an edge over everyone else. The second big issue is that these indicators are they don't have the capacity to capture complex forecasting patterns. So they're not able to figure out you know when there's complex trading patterns in terms of what's really going to happen. They're not able to take in those signals, and they're not able to extract the forecast signal from that. And so this is kind of why like traditional trading indicators have kind of gone away. It's just because they're not as effective as they used to be, because a lot of it is automated now. And second of all, the simplistic indicators that people use right now just don't have the capacity to figure out these more harder to read signals. So the difference between traditional indicators versus machine learning is that with traditional indicators, they're very easy to calculate. You can use just a regular calculator and calculate most of these kind of indicators. But while they're easy to use and easy to calculate and easy to understand, they have very limited ability to factor in different information. And the way you have to think about forecasting is that it's kind of like mining for gold, right? You're trying to get some gold, but there's only so much gold in that ground. And in order to get more gold, you have to look at other places as well. And that's the same thing with with forecasting. You can only forecast so much based on historical price. You need to use other information, like maybe is the Fed going to raise interest rates, or what's the price of oil, or what is consumer sentiment, right? So you have to use other factors, not just historical price, because there's only so much predictive signal in price. And the other big problem with traditional indicators is that they're just way too popular. There's too many people already using these traditional indicators, so it's hard to get an advantage. You basically don't have the edge you need. Now, machine learning, on the other hand, is much more computationally complex. Usually you need some sort of GPU. You need to have a fairly powerful computer to use these machine learning models, and thus they're not nearly as popular. But the real advantage you get out of machine learning versus traditional indicators is that you have unlimited ability to factor in a whole bunch of different types of information. And one of the most important types of information you can factor in is things like natural language, right? So like what people are writing on Reddit or what people are tweeting about. And by doing that, you're able to capture a lot of other signals that couldn't be factored in with traditional indicators. Because a lot of these traditional indicators, all they use is historical price. And because it's so cutting edge, you're able to get this kind of edge over other people, and thus able to usually have more profitable strategies. So what is machine learning? So to understand machine learning, I like to contrast it with conventional programming. So with conventional programming, you're putting in some data, you put in a program, like this might be a Python program, for instance, and then it spits out a result. So an example of this might be, oh shoot, my thing just jumped. Let me see what happened here. Okay, so an example here might be the data coming in might be the day, right? So like today is December 8th at 5 p.m., 5:20 p.m. my time, Pacific time. And then you plug that into the program, and the program will spit out its prediction of what the stock price is going to be at 5:20 p.m. On December 8th. So that's kind of like what conventional programming does, right? It basically takes the data and spits out something based on this data, right? And it's explicit, right? It's like a sequence of commands that you give the computer to do this. With machine learning, it's kind of similar, but you're flipping the result in the program. So what you're doing is, rather than feeding in the program, right, like some sort of Python commands, you're basically feeding in what you expect. So instead here, so the data is the same. So let's say it's a date coming in, like the current date and time, and the result might be, you know, stock's going to be $200, and so the program will learn it, right? Will learn that at this time it's $200. So rather than telling the computer how to calculate the result, what we do is we put in the result and we train the model to figure out what the program is. So it seems very slight, but it's actually a big fundamental difference. And in fact, I would argue that machine learning is more similar to how we learn as humans than conventional programming. So conventional programming is analogous to a neurosurgeon opening up someone's head and rewiring the neurons. That doesn't happen very often. It does happen for a few people, but most people, the way they learn is the teacher gives you examples of like, okay, 2 plus 2 is 4, and 2 plus 6 is 8, stuff like that. Give you examples, and from those examples, you learn how to add 2 plus 2, right? So it's actually in some ways easier to do machine learning just because it's more analogous to how we learn as a human. And in fact, I would argue that machine learning is more about being a good teacher than anything else. So if you guys have ever had to teach anyone, this is kind of more similar, right? Because it's a very similar thing where you're trying to present information to the model and trying to get the model to learn it and diagnose why it didn't learn it. Again, guys, feel free to drop in questions, comments as I go. Okay, so for today, the tools we'll be using Alpaca. So let me show you Alpaca. It's a great deal. I mean, it's largely free. They're not quite as generous as they used to be in terms of their API, but you can sign up for free, and they give you a bunch of data feeds to stocks, to crypto, and you can trade a bunch of different things on there, right? The APIs are really simple to use, yeah, I mean, I use it. I use this all the time. It's a really great API, and it's also pretty robust. So definitely encourage you guys to check it out. I'll drop this link into the chat as well. So we're going to be using Alpaca, and just Python, regular Python, and then pandas. So if you guys don't know what pandas is kind of like Excel for Python, right? It's a way to do like tables programmatically. So rather than you having to type in, a plus b is equal to whatever, you can do it programmatically with Python very easily. We're going to use the TA library, the technical analysis library in Python, to generate some features. We're going to use a model from scikit-learn. Scikit-learn is one of the most popular shallow learning models out there. We're going to use Google Colab. Google Colab is also a really great deal. It's it's kind of like free compute from Google. So the only limit to it is that you can only run it for like an hour or so. But otherwise, it's great. It has a great interface to it as well. We're going to use Google Cloud Platform because it has a lot of great AI tools and models and utilities to do your machine learning. And then we're going to use the Google Natural Language Processing in this example here. So I showed you a little bit about Alpaca. So let me tell you what we're going to be doing. We're going to be going to a site called Finvis. So if you guys haven't checked out Finvis, let me drop this link into the chat as well. If you go to the Finvis website, you'll see that there's a bunch of news articles. You could let's say you're interested in buying Meta. Okay, so you can go to Meta, and when you go to Meta, you see a bunch of great charts and stuff. But the other thing you see is that there's a bunch of news articles, right? So every day, almost every hour of the day, there's a bunch of articles on Meta. And what we're going to do is we're going to be taking these articles and then applying natural language processing on it to figure out, like, is this a positive article or negative article, right? So we can kind of understand the sentiment. And then so we're gonna be using a package called Beautiful Soup to scrape it, and from there we're going to generate training data, right? So we're going to get data from Alpaca through the APIs. We're going to be getting the training data, and then train the model, and then testing out with the test data. So it keeps jumping. It's crazy. Okay. Yeah, so we're going to train the model. Then we're going to generate the predictions and then analyze results, right? To figure out what happened. So let me show you what Google Colab looks like. So this is another great site. Let me drop this into the chat as well. So this is all free, so highly encourage it. I'm not going to go into the code too much. I'll just show you some of the results. But basically, the way to think about Google Colab is simply it's like simple Python, right? So you could do a equals 2, b equals 5, a plus b is 7, right? So very really simple stuff like that. Here we're doing a bunch of packages. Um, Here we're just authenticating with Alpaca. Here we're just setting it up to set up the natural language processing from Google, Google NLP. And then what we do is we just pass in the news articles through it to figure out the sentiment. And rather than us having to read it, Google's machine learning will automatically figure out the sentiment, say, yes, it's positive news or negative news. And so that's what we did here. So you could see that each article we have a score as to is it a positive article, negative article. And then what we do here is we combine that together with our pricing data, and then we train the model. So this is how we get the pricing data. And so right here we're just setting up all the training data for the model, and then we do the same thing with the test data, so we can make sure it works. And this is how the data looks like after we set it all up. So we have the close price, what the time of day is. We have some time features here. We have like what the sentiment is of at that time from the different articles. And then we have a whole cast of traditional technical analysis indicators here. So we feed this all in as features into the model. So there's 21 features coming in. And then we train it. And what we're doing here is we're training on a rolling basis. So what I mean by that is let me just draw. Oh, actually, I don't know if there's a sketchboard on this. I'll just use my hand. So basically, we're forecasting 15 minutes in the future, and it's a rolling window. So basically, we look at the historical data and we roll forward, and we forecast 15 minutes in the future. So we're trying to figure out in 15 minutes, is the price going to be higher or lower? And then we just use a model called random forest to train the model as the model that we're training. Okay, and then after that, we do a prediction, and then we see how good it did. So here you can see we just called the model to do a prediction, and then we could see how you could graph it out to see how well it did against ground truth. So this is a little bit hard to see, but the blue here is what we call ground truth. This is the actual close price, and the orange is the predicted. So what you see here is that, and the straight lines, what that means is the market was closed at that time. So like this is a weekend, right? This is kind of like in the evening. So what matters is how closely does the orange line follow the blue line when the lines aren't straight. So you can see in general, it's pretty close. It's not perfect, but it's pretty close, right? So overall, the model's doing a good job. And then to understand, what feature was most important, you can see that here RSI was actually a very important feature to the model. And that's why a lot of people tend to use RSI, but some other features are also pretty important as well. Now, in terms of our error, you can see that we had a percentage of 0.25%, so not too bad, right? And the MSE was 0.268, so not bad either. Now let's see what happens if we don't use the NLP. So before we used the NLP, we basically fed in the Finvis articles, and then we did a sentiment prediction on it, right? Like how much was the sentiment negative or positive, and then we're going to do the same process as before and just try to figure out is how important is having this kind of news article data in our model. How much does that help? And so one of the things that we could do is we can calculate what's called a p-value. And p-value, it sounds kind of complex, but all it is just trying to understand the statistical significance. And essentially the way it works is if the statistical significance is pretty small, as it is in this case, it's really, really small, that means that this was very, like the NLP indicator was really, really significant. So as you can say, as you can tell, and this is kind of obvious, of course, is that feeding in, you know, news articles about a certain stock is actually really helpful in terms of predicting the price of the stock, right? And that's, you know, that's maybe kind of obvious, but it's something that we can do automatically. And so we can do this for a lot of stocks, and we can do it much faster than any human can. And so this gives you an edge when you're trying to trade in the market. Nicholas asked, just to confirm, we are predicting the price the stock would be in 15 minutes. Is that right? And the answer is yes. We're just predicting 15 minutes in the future. So this is a good question because machine learning tends to do really well on frequent short-term forecasts. Longer-term forecasts, let's say you're like Warren Buffett and you're trying to predict the price of Coca-Cola in 10 years, 20 years. That kind of stuff is better for humans to do because they have a lived experience of 50 years or 60 years or more, and machine learning doesn't have as much of an advantage there. Where machine learning has a big advantage is when there's lots of data and you're doing it very frequently. So short-term forecasts tend to be better for machine learning, and that's why we're doing 15 minutes in the future, because the longer-term forecasts are usually better for humans to do. But great question, Nicholas. Yeah, so if anyone else has questions, just drop it in. Happy to answer them. Okay, so this is the model that we trained. So once you have the model trained, what do you do with it? Well, what you need to do is you need to use it to trade stocks. So this is a really simple code snippet of how to use the prediction. So if the prediction, so if the close price is less than the prediction, times some sort of threshold, right? Because you want to have a certain threshold that you because if it's just lower, it might jitter, right? So you have to have some sort of threshold, like maybe 10% or 20%, so that if the prediction is more than, if the close price is more than smaller than the prediction plus that 10 or 20%, then what this is basically telling you to do is that you should buy it, right? You should accumulate it, right? And that's what this is indicating, right? So vice versa, if the close price is higher than the predicted amount, right? The amount that's going to be the predicted amount that's going to be in the price in 15 minutes, then you should sell the stock. And if it's in between, like if it's not within the threshold, then you should just hold it. So this is a very simple trigger, right? So for most algorithmic trading, there's the prediction and then there's the trigger. And this is an example of the trigger. Some triggers are really complicated. Some people use like reinforcement learning to do really sophisticated type of triggers. But this is an example here. We're just using a very simple trigger, right? Just basically the predicted price of the stock in 15 minutes. Okay, so just give you a quick demo for that. Now, what I'm going to do now is show you. So once you get the prediction and you have it back tested and it works, how do you productionize it? So there's a really great site out there that we have called Lumabot. It's on GitHub, so some of you guys might be on GitHub, but this is free code. I want to encourage you guys to follow it, use the code, but it's a great framework because once you have a working model, like I just showed you, looks like it's making money, making good predictions. What you could do then is you could plug it into Lumabot here, and it'll allow you to automatically trade. So it's hooked up to things like Alpaca. You could trade, crypto, stocks, options, forex, whatever. You could back test it. So it's a really powerful tool, and it's totally free. So in this next demo, I'm gonna show you how to use this. So yeah, if you guys want to use this, you could just go to GitHub and then you could just do a git pull right here. So I'm going to put this link into the chat for you guys as well. Okay. So this is actually I think I might have, yeah, okay, this slide. So let me show you this is Google Cloud. Um, Google Cloud is actually really great because it's fairly easy to use, and if you sign up, they give you like a couple $100 worth of credit. And they also have this place called Vertex AI. This is where all the AI stuff is, and they have like Jupyter notebooks. They have models. They have they have things in here that you could just do point and click predictions here, no programming needed. I could just give you a quick example. So you could do things um, um, like forecasting. You can go here and do forecast, right? This is what we use for our class, and uh, but more importantly, they have these workbenches. They're known as Jupyter notebooks. So I'm going to show you what that looks like, but also want to encourage you guys to check out Vertex AI on Google Cloud. Let's see here. So before I show you the results, so Lumabot is what you use when you're ready for production. It would basically taking kind of like, so we use like these like Google Colab. You could use that to kind of set up experiments and get things running and debugging. But eventually, you're going to want to get into production. And usually, you do this in the cloud. You could use your own laptop in your house, but it's a little bit dangerous because what if your internet goes out or your power goes out? So you could be really stuck. So traditionally, it's better to use to run the stuff in the cloud, just for reliability and also speed. Right, you have less latency in the cloud than you have like using AT&T or Comcast. And this example here, what we're going to be doing is we're going to be using the code that I went over before, and we're going to be trading Bitcoin and TQQQ. So this is an index, and it's being done in the Google Vertex workbook. And so I'll show you kind of how this works. Okay, so so the setup of this is pretty simple. We have this is kind of what you see. There's kind of like the strategy, and I have two strategies. I have one for the stocks, one for crypto. And then to set up all the requirements, we have this requirements file. So you can just do a pip install, I think -r requirements. So it's pretty simple to get going. You put your credentials in here in this Python file, and this one downloads the data. And what you do is you once you have your model kind of like proven, you can put it in here and you can do back testing. So so it's pretty easy to set up. You have all these different parameters in here in terms of like what kind of model do you want to use. You could have like when do you want to take profit. Um, you know, um, what is the look back period? What is the frequency? So there's a bunch of different parameters you can put in here. And all the code here is all open source. So you can instantiate your model in here and then run it, right? So you could go down here and run it and run the back test. And what it'll do is it'll do the back test for you. So you could see like what the prediction was, what the last price was, what kind of error rates you got, and see how it performed. And so here's the exciting part. By using this model, you're able to get a much better return. So the benchmark is basically just buying Bitcoin and holding it, right? The strategy is to be a little bit more active, to use machine learning to kind of predict the price of Bitcoin. And as you can see here that it did a lot better. So, in terms of cumulative returns, you can look at it in terms of, the volatility. You can look at the end of the year type of returns versus the benchmark. So in almost all cases, the strategy using the machine learning models beats the benchmark, which is just buy and hold. You can see the distribution of monthly returns. You can see the kind of like the beta. So that it has a lot of these built-in metrics. So it's pretty easy. You just get a few lines of code in there, and then you can run it, and then it shows you what happens, right? You see the worst drawdown periods, right? And then you can also see kind of like what did it actually do. So you can see where it bought and sold, right? And you can see the benchmark here, which is the red line. So the active line is the machine learning crypto strategy above. So pretty neat stuff here. And then here you can see kind of like the volume, your portfolio going up and down and stuff. So and then we did the same thing with the index as well, the stock index. So we put our model in here, just run it. It looks like a lot of code, but it's really not. A lot of this is kind of boilerplate stuff. You're just setting up features and stuff. You're basically taking the stuff that I showed you before in the Colab here, the stuff that you got working in here, and you're just copy and pasting it into the Vertex code that I showed you earlier. So you put that in, and then the results here, same thing. So in this case, the results are quite stunning, actually. So you can see that if you just did the buy and hold versus the strategy totally outperforms, right? It's about 60% versus maybe less than 20%, just versus the buy and hold. So way better. You can see kind of like the volatility match difference. You can see the end of year, the distribution of the monthly returns, the rolling beta, all the kind of metrics that you guys would expect. Sortino is really good. Sharp ratio is also really good because usually, anything above 1 is really good. And in this case, it's sometimes it's even above 2, so it's pretty dang good. Yeah, so by all metrics, this model did a pretty good job, and you can see all the detailed metrics over here. So all this stuff is all computed automatically for you inside of the Lumabot code, which is all free. So highly encourage you guys to use it. And then here you can see kind of all the buying and selling that the bot did, right? So based on this prediction, whether it's bought or sold, so it kind of did a bunch of them. So yeah, so that's what you do once you're in production. And then yeah, so in the demo, this is meant to kind of show off capability, not necessarily trading returns. And of course, we're going to go into a lot more detail. I found out if I go line by line, explain everything, people would get totally lost. So I don't want to lose people today. But feel free to ask me questions if you have any particular questions. I could dive into a lot more detail. In the course, we're going to be going over a lot of the basics of machine learning, like how to set up a model, how to get training data, how to get test data. We'll go over what is deep learning. We'll go over how to build a forecasting model. And talked a little bit about the demo, right? In the demo, we're just using random forest as a model, very simple one. We used a lot of the common indicators as features. And then we're just forecasting 15 minutes in the future. So fairly simple. Then I showed you the trading demo. So once you got I think all the kind of bugs worked out in Colab, then you could take it to Vertex and run longer jobs, do more back testing, verify it. And then the next step after you do all the back testing is you want to do paper trading, right? So don't use real money, paper trade for a little bit, make sure it actually makes you money. And then once you're sure about that, then you go to active trading with real money. Are you able to share the Google Colab code? I think so. I think that would be posted later. So yeah, be on the lookout for it. But good question, Nicholas. Okay, so let's go over the course. So this is the course, and there's many different options. One is a self-directed plan, and this is really nice, especially for busy people. You can kind of go at your own pace. There's no time limit. So if you're busy one week, no problem, just do the next week. There's a live class plan. The nice thing with the live class is that you can interact with me, but more importantly, you can interact with other students. So there's been so many people who've taken the class and they've started working with a partner on homework assignments, and they find that they work well together, and they're now kind of like partners on these algo trading strategies. So I think that's one of the big advantages of live classes. Also, if you're stuck on stuff, you work on how to debug stuff. Um, and then there's the more in-depth kind of one-on-one tutoring, project help, right? If you want to do that. Um, the other thing right now is there's also a bunch of payment plans available, so to make it much more affordable. So for the self-directed course, basically 1995, you get access to our video library, access to all of the code, you get access to the Lumabot community. Our instructors like myself help support you guys. And then there's this weekly discussion hour that we have on the Lumabot community Discord. So, really, really great deal there. And then on the machine learning course live, basically you get everything here. 8 weeks of classes, 2 hours per week. And then there's 6 hours of dedicated Q&A. And then you get access to everything in the future as well. And then you can help with 2 personal projects. And the personal projects we're talking about is the first phase is we're working towards building a good forecaster. And the second one, we're building a good trading bot. And then, so if you need help with a resume or, need help with interview prep, we can help you with that. And then we give you a lot of support via email and chat. And then if you want to have more kind of like specific one-on-one, we can do that as well. So you pretty much get everything here, plus a lot more detailed help with custom projects, right? So this includes a lot of one-on-one time as well. And let's see. Yeah, so lots of people have taken a course. You can go to our YouTube channel to see a lot of the reviews. So a lot of people have posted reviews there. And this is one of the top rated courses. So in the course, we're talking to depth about what machine learning is. The point of all of this is so that you guys can learn the fundamentals. You can use it to make better investment and trading decisions. You know how to set up machine learning and use time series data, how to use natural language processing, which is incredibly powerful, how to use deep learning, and when is it appropriate. How do you do the analysis, like the exposure data analysis? How do you get all the different data, and how to use it inside Google Cloud, and how to do all the optimizations as well. So I kind of talked already about why it's good for trading. So this is the curriculum. So the first week is really just kind of getting set up oriented. People are starting to partner up at this point in time. We make sure that everyone's system is ready to roll. Week 2 is we do machine learning basics. So why do we do machine learning? What is machine learning? You start with 2 of the simplest models out there: linear regression plus random forest. You learn the basics of machine learning with the training process, and then we get into deep learning. So deep learning is really powerful because you can handle a lot more complex patterns. So we talk about the difference between the two, like shallow learning up here versus deep learning. We talk about like when do you want to use it, how to use it, when it makes sense, when it doesn't make sense. And then we get into training, validating deep learning models, which is actually a lot harder than shallow learning. So we get into that. And then optimizing, right? So getting the models is one thing, getting to optimize models is another thing. So we talk about how do you optimize it. So there's various tools that you will use, like Google AutoML tables, Google AI. Talk about using an experiment sheet. And then the second part is really the project, right? So we're going to do a time series forecasting. Everyone usually does their own thing. You could do one on predicting the price of Bitcoin or 500, or maybe with the exchange rate going to be between the euro and the dollar. And then week 2 is basically building a stock forecasting model using kind of what you learned here. And so by the end of week 2, on the second part, you'll have a working stock forecasting model. And then the third part is incorporating natural language processing. And this is incredibly important because there's so much signal in natural language, right, and what people write. And so we want to be able to pull that into our models, so that you learn how to do that, how to process it, and then you hook this up to your forecaster, basically improving the results, as well as start working on the Lumabot productization, so you actually start using it live. So we have a class coming up next month. Registration closes on the 19th, starts on the 26th. It's 8 weeks. And yeah, really hope that you guys will take a look at this. There's a little bit more about me here, and there's a bunch of testimonials, so check that out as well. So let me put the link into the chat so you guys have this. Hey, so yeah, we have about 9 minutes left to kind of go over any questions, thoughts, comments anyone has. So feel free to drop them into the circle chat here, and we could try to address it. Thank you, Nicholas, for the great comment. Appreciate it. So if there's any, even questions kind of related to this, I'm happy to try to answer or address. Or if there's something in more detail, I went over some of the code in really quickly. But if you guys want to know more or try to understand how something works, I can go over that as well. Okay, so we have a question here. Would you say this is geared more to someone looking to find a job in ML, or for someone to use it for their own trading? I've actually had both types of people do take this course. So some of them were using it to do their own proprietary trading. Some of it want to get a job on Wall Street. So it's good for either, actually. Really gives you the background, really hands-on experience. A lot of people lack the hands-on experience, so this kind of gives you that hands-on experience. Plus, when you walk out of here, you walk out with kind of like a working bot that you could use and optimize. So great question. So feel free to drop in other questions or comments. Okay, we have another question here. Can I use the code to build bots that can be used on my own platform that others can use? And the answer is absolutely yes. So let me bring up the Lumabot GitHub again. So this could be run anywhere. It could be run on your own laptop. It could be run on Google Cloud. It could be run on AWS. You could put an interface around this, like Radio, for instance. Radio is a really nice interface that provides like a nice GUI, a nice UX, so that you can control this. So yeah, absolutely. Yeah. I mean, it's something you could use yourself or let others use. So definitely good question there. And then another question here: does ML overlap with other types of algo trading styles, or is it really a standalone type of programming? Actually, it overlaps. So, like I showed you. Let me go back to the presentation. So if you look at this, this it's only what 4 or 5 lines of code. Maybe I guess 5. No, it's actually six lines of code. So it's very simple. This is traditional programming. This is an example of a very simple trigger. So we're using a very simple trigger, which is like a very simple algo trading code. and we're using it. We paired it up with machine learning, right? Machine learning is basically spitting out a prediction, and then this is a very traditional type of algo trading Python code, and but this also could this also could have been machine learning. So for instance, in securities that are lightly traded, like really like low float stuff where there's not a lot of people trading it, you could use reinforcement learning. Reinforcement learning is good when there's a low number of players. You can use reinforcement learning um, to trade against other people, and that would be machine learning. Likewise, like right now the prediction, I use machine learning, but you could have just used traditional indicators where there's no real machine learning. It's just a bunch of traditional indicators. It's just not going to be as accurate. With machine learning, you can have a lot more accurate predictions. You can do a lot fancier type of um, algorithmic trading, a lot more sophisticated type of algorithmic trading that can lead to a lot more profitable strategies. So good question there. So we have another about 3 or 4 minutes here. So happy to address any other questions as you. Oh yeah, and then another question here is: can multiple bots trade multiple strategies all at once? And the answer is yes. In fact, it's very common. In fact, traditionally you want to have a portfolio of stuff. Um, so it's very common to actually run multiple bots. It's actually super common. A lot of people employ a portfolio strategy. So it's a good question. You would of course have them run on separate machines. You don't want one bot to affect another bot, and yeah, and you definitely would run something like that in the cloud. You would not run that on your. It's okay to run paper tests or back tests on your own PC or your own local computer, but do not. I would strongly encourage not to run production real trading from your laptop at home. It's just or coffee shop, right? You need a very reliable internet connection. You want your computers to be up all the time. It's just not worth the money. The little bit of money you pay Google is absolutely worth it. Plus, you get better latency. So a lot of times with algo trading, you're like here in this case, we're trading 15 minutes in the future. So you want to time is of the essence. You want to get the data as quickly as possible and execute your order as quickly as possible. And that's and so you want a provider that has really fast, low latency internet. That's critically important. Great question there. Okay, so we're almost out of time here. We probably have time for maybe 1 or 2 more questions, depending on what they are. Okay, it looks like we don't have any other questions, but just want to thank everyone for attending today. Hopefully you learned something. Again, do check out, I'll put the slide up again. Do check out um, our YouTube channel. Just a ton of great content there. This Discord channel is great because you can contact other people, talk to other people who are thinking about the same kind of thing, and people usually help each other. But hope you guys have a great evening and happy holidays, and hope to see some of you guys next year. So thank you again for attending. I really appreciate it.